Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, December 9th, 5:58 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in an uptrend. You can see the coveted four green arrows over here. However, introducing the yellow sub arrow under market leadership as they were kind of taken to the woodshed today. A lot of leaders have been on very nice runs, got extended, pulled back a bit, worked and worked their way higher again, and pretty much slapped down right out of the gate today. Uh, Four or five of the 21 over 21 breaking the 21 day today. So we'll keep an eye on how they act the rest of the week. But enough red on the screen and enough gains made that we really don't want to give them all back. That's why we do a combination of offensive selling and defensive selling, and we did some of that today. But introducing the yellow sub arrow here under market leaders. As far as the major indexes go, still trending above their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. So what happened today? As I said, growth leaders hit hard. Here are the numbers. We'll dive into it more as we go through the video. 21 over 21 list. Six up, one neutral, 14 down an average of 1.75%. The big eight, mixed today, but down only a 0.5%. Apple led that group. The RG8 is our eight growth ETF composite. FFTY, which is the IBD 50, you can see that down 4.2%. That really told you all you needed to know about the pond that we fish in and how those names did today. But the RG8 down an average of 1.43%. S&P 500 opened down about a 10%, put in the highs within the first 30 minutes. Always important to monitor that opening 30-minute range. Worked its way lower, a couple attempted bounces, but then closed near the lows of the day, holding that 60-50 level that we've held out as one of the key levels, though. So maintaining the recent breakout, down 0.6% on the day, equal weight, a little bit better, and was better all throughout the day. In fact, while there was some hard selling early in the morning, RSP was green. So that told us it was rotation, not distribution. NASDAQ 100 down 0.8, equal weight a little bit worse, down almost 1%. The Dow down 0.5%. Same with mid caps. Russell 2000 small caps gapped up 0.9% at the open, but faded along with the rest of the market throughout the day. Ended up down 0.7%. Really can't get any momentum in this handle that it's building. Any momentum to the upside has been getting sold. Global diversified 60/40 stock and bond down 0.22%. Our flagship GROTECTION portfolio down 1.17% today. Great week last week, kind of normal to give some of it back, and that's what we saw today. So let's start off with the S&P 500. You can see here it's sitting on this thin purple line. That is the 8-day exponential moving average. Let's go to the 5-minute chart. You can see the open and then putting in the high within the first 30 minutes. A couple of bounces, but fading most of the afternoon. Should we be concerned? Well, let's go to a 60-minute, and I can draw here why we've been using 60/50 as this level. That's where we paused before the most recent breakout on the 4th of December. Normal to pull back to that breakout level, and that's what we saw today. We will start getting concerned if we get back into this 6,060 to 60/50 level, but really, as long as we have a six handle on the S&P, nothing to be overly concerned about. You can see the 21-day moving average will cross that 6,000 level either tomorrow or Wednesday, depending on the action. Tomorrow, that should provide an additional level of support, and that 60/17 back here in early November. That's where we pause before the pullback and bounce off the 21. that 6017 level should provide some support as well. NASDAQ 100 was a big leader last week, so it still is above the 8-day moving average and holding its breakout level as well, which is this 515.58-ish level. So normal to give some back from that standpoint as well. Dow Jones Industrial Average broke the 8, still above the 21-day moving average. Relative weakness over the last 2 weeks on the Dow. S&P 400 mid cap still flagging here. Time for it to find some support just a little bit above that 21-day moving average now. If that breaks, our concern level will kick up. We are expecting a bounce there. Same situation with small caps. Uh, there you can see the unfortunate gap up and outside negative reversal, breaking that 2400 level. Again, we're expecting it to hold the 21-day moving average on any pullback, and we'll look at RSP, the equal weight. That is sitting right on the 21-day moving average. Those are the major indexes. Inter-asset correlation, we'll start with the VIX. VIX popped today, up 11% with a 14 handle now. So a little bit of fear coming into the market, maybe geopolitical or economic related. I'm not going to try to figure out why it popped that much today, but the growth leader showed what was going on under the hood. Let's go to the U.S. dollar. Second straight day up. Possible that this was a shakeout to the downside on Friday as it's making a higher high, but that breakout is still failed on the dollar from 2 weeks ago. But it is stubbornly holding on to this 21-day moving average. Gold and silver stocks, strong day, closed at the bottom of the range. Gold gapped up, ran into the 50-day moving average, still closed up 1%, but as I said, near the bottom of the range. Gold stocks up 3%, again below that declining 50-day moving average, but clearing the 21. Silver, nice day, up 2.6% above the 50 and the 21. Bitcoin playing ping pong around that 100K level. Back above it over the weekend, back below it today. It's around 96, 97K. Right now, a lot of volatility, broke the 8-day moving average. We're monitoring against the 21 for a portion of our position. Chart still looks fine. It's just that key 100K round number level that everybody's focused on. On to bonds, broad bond index down, TLT, the long bond down. You know, if prices are down, that means yields are up. Here's the long bond. A bounce possible that this was an undercut stopping. This is really a pseudo morning star on yields with the undercut of a little bit of a resistance there and then a bounce and getting back into it's a 4-day version of it, not the normal 3-day, but we are still below the declining 21-day moving average and a long way away from where we topped 3 weeks ago in yields. TNX, the 10-year, bouncing as well. This is really in a tight support area and consolidation level here over the last week and a half. So those are the major indexes. Let's go to the tail of the tape. News, China stocks pop big time on additional stimulus. They popped a few weeks back. That faded. They came in with another bazooka. And let's see if this is just a one-day wonder or not. But China definitely was a bright spot today. And in Syria, longtime President Assad finally ousted. They've been in civil war for what seems like forever, but the rebels finally took over. He got on a plane and went to Russia, tight alliance with Russia, but Russia's distracted in Ukraine and couldn't properly defend or step in the way they used to, and that resulted in him exiting the country. That sparked oil prices up a bit. So the keys coming into today, S&P against that 60-50 level, we undercut it by a couple of points, closed a couple points back above it, so that's holding for now. 516 on the Qs, still holding as well. We didn't touch there as that's been showing relative strength. Mid and small caps breaking out, certainly no. They're still flagging, so we're going to take this off the keys for tomorrow. Bitcoin, we'll take this off the keys and introduce another one as well as that. We're just playing ping pong against that 100K level right now. Day count after 5 out of 6 up, 1 day down. 12 days above the 8, just barely sitting right on it, basically 15 days above the 21 day. Expectation still positive as long as we are above the 21 on the S&P and the NASDAQ 100. As far as individual charts go, to the upside, oils, China, gold, silver stocks. XLV, that's healthcare. XLRE is real estate. To the downside, banks, software. XLC, that is mostly Meta, and that's why that was down. Also Google as well, but Google was up slightly. But XLC and utilities down as well. As far as the portfolio goes, combination of offensive and defensive selling, weakness on VRT. Our stop was hit for a small loss on that last buy that we did. Reddit already extended to the upside, gapped up on a big upgrade. We took two pieces of that off into strength. Something new here. We're still showing our RVAB. It's 1.90, slight reduction versus Friday. But we're going to start showing our balance at risk. And this is something we use extensively in here. And it's something that gives us the strength to not get shaken out of positions. Basically, it's the sum of all of the stops for every position that we own. If they were all taken out tomorrow, then that would mean a break all the way down to the 200-day moving average on the indexes. Our downside still only 7%. So that's our balance at risk, 7% after the profits that we've racked up, approached the 50% level over the last 13 plus months since the breakout in November of 2023. Want to protect those profits. We always have our eye on the door. Should the market change, a little bit of weakness, certainly in leaders today, but bottom line, growth leaders hit hard. S&P 500 did hold that breakout level at 60.50. So the keys coming into tomorrow, we want to see if we can still maintain that 60.50 level. Same with the NASDAQ against that 516 level, and we'll be focused on whether or not there was follow-up weakness in growth leaders. So those will be the keys for tomorrow. Let's take a look at some charts. The 21 over 21, two new additions. One is a gap. We've been playing a lot of gap up, and they've been working. Another one on massive volume. And the software security sector is really kind of looking for some leadership. It's bounced back and forth. Crowd was the leader for a long time. That suffered after that big outage. But Rubric with a big gap up and an inside day, big gap up on Friday after its earnings report, inside day today. So we added that one, and we also added a China stock. This was a very nice flat base. This is the last time China stocks moved, was back in September. A lot of them gave up a lot of the gains, but this TCOM held very nicely in a tight 17% flat base, gapped out of it today. 68% above average volume, up 8.7%. So we're putting a China stock. It's in the leisure travel booking. Anything that would be financial related, we wouldn't be touching. But this one holding up, it's liquid, and adding it to the list. So let's take a look at some things that got hammered today. Uh, let's see. Well, first, we'll start with Reddit, where we did the offensive selling. And let me bring in this Keltner channel chart from Thinkorswim. You can see here we took some off last time it got extremely extended, added it back, closed between the 2 and 3 ATR on Friday, gapped up at the +3 ATR, ran into the +4. We were taking right out of the gate, doing some selling here. And we'll look to add that back if it continues its leadership and pulls back to a reasonable entry point. Our exit was in the 170s. We did two sells on that today. You can see just two extended from the 21-day moving average. VRT closed beneath the 21-day moving average. Our last add on this was negative. And with that, and a combination of it breaking the 21, we sold a fourth of that position today. SSO, using the S&P 500 for that, but we trimmed some into strength last week when it was a bit extended, not as extended, but with the weakness and has RSP got weaker throughout the day. That impacted breadth a bit. We saw small and mid caps, which were strong, giving it up. So we booked some gains in SSO as well. So VRT, SSO, and Reddit were the three trades today. So let's look at what really got hit. CRDO, we're in this. It had a gap up, very volatile name, down 9.7%. Its ATR is almost 9%. So this is just another uh, day at the beach for not really at the beach. If you went to the beach, it ended up you got rained out, but not a good day, but still holding the low of the gap up day, which is a big area of focus when stocks do a big move up. The low of the day should hold. CRDO hit hard today. What else got hit hard? SMR. This has been a leader for a few months. Second close below the 21-day moving average. Had one last week, regained it on Friday, back below it today. VRT we already discussed. There's Bitcoin still above the 21. Palantir gapped up, ran into this 80 level, big leader, big move, normal. But 5% reversal on 158% volume means there was some volume selling absolutely on it today. CLS down 4.7%. Sprouts was riding the 8 for a while, uh, broke the 21 today. And let's take a look at some other stocks that aren't in the 2121 that got hit. Hava, couldn't find any news on it, but both Hava and Sweet Greens, which are upscale healthy, smacked. Just both of them down over 10%. And very obviously, what happened with Kava? So, gapped up on its last earnings report, it came down, visited, and bounced at the 50-day moving average. This is really all normal behavior. But the bounce at the 50-day, you would expect it to build out the right side, maybe build a 5 week base out, and make another move higher. 193% average volume, down 12.4%. This is absolutely a changing character for this today. Maybe for some reason, some big holder had to sell. I don't really know. If it reclaims the 50-day moving average this week, you could look at this as a shakeout. And but for now, glad to not be involved in Kava. After hours, a couple of earnings, leader Oracle down 7.74%. AI, the company C3 AI up 7%. It was up significantly higher than that. It almost touched 50 after hours. So AI looking fine there too. So let's get back to the 2121. Uh, let's look at a couple more that broke the 21-day moving average. LNG down 3.4%. Carvana, leader for a while, breaking below and closing below the 21-day moving average. NVIDIA got back above the 21-day at the end of last week, broke it again today, sitting right on the 50-day moving average. And that looks like it's it. What other leaders that got really hit hard today? App. There was some speculation that this would get added to the S&P 500 on Friday. It ran up in anticipation of that. It did not get added, down 14% today. Huge winner since its gap. Not even to the 21-day moving average, but its first close below the 8-day moving average and down 14.7% on the day. Coin got hit, trying to break out and just can't get any traction. This corresponds with the ping pong that Bitcoin has been playing around the 100K level. What other leaders were down 5 or more% today? How about Axon, big leader? A lot of them, what you're seeing is the first close below their 8-day moving average, approaching the 21. Anything approaching the 21, you would expect it to bounce. Otherwise, it's a character change and not a good one for it. MSTR, we got out of this last week on that gap up with Bitcoin over 100K that got sold into. It was down 7.5% today, still sitting on the 21-day moving average. Let's see, five percenters. VST, another a utility tied to data center, broke the 150 and the 21-day moving average today. And let's see, Hood also down 5%. Still, with it being down 5%, you can see how strong this has been with the ants still above the 8-day moving average. So looking good as Hood, but still down 5% on the day. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, reach out to my partner, Dan Stewart, dan@revereasset.com, and he also answers the phone if you call. Our flagship portfolio is named GROTECTION, serves a dual mandate, that is grow assets during uptrends, protect them when things get weak, protect them even more if they start breaking the 50-day moving average. Get the heck out of the way. If you break this black line here, that's the 200-day moving average. Every bear market in history has taken place below that black line, as long as we're above it. From a index standpoint, we give the market the benefit of the doubt. We won't be all out of our core S&P 500 position unless we break that level. But all the rotation takes place within the S&P 500, from growth to value, from sector to sector, from defensive to momentum. It all takes place within the S&P. And on a day like today, when leaders got crushed, we're very happy that we've got a core position in the S&P 500 to smooth out the volatility. And with that, I'll wrap it for Monday, December 9th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.